How are you?
Great. Always
Thanks
good to be
for
here.
coming in.
Always great.
Out of your busy life these days.
Yeah, it's crazy. The sun is shining. It's spring is
weather.
here. It's great.
Yeah, finally things are nice. So
Yeah.
we're filming this podcast in the month of May, and I do want to talk about today's episode, Jason, and it's that time of the year, right? I mean, I think what's happening right now is we're coming up to a long weekend in May. We got a long weekend in July. And the big talk is the family cottage. And on today's show, I want to get into some of the strategies on passing on the family cottage. And for many families, the summer or the winter home or the cottage is one of their most treasured assets. And most cottage owners want the cottage to stay in the family for generations to come. However, this requires significant thought and planning. Families really need to start to think about the tax plan around it, the legal plan around it, the risks, Jason, that many families will have disputes over that cottage. And I think on today's show, we've got a lot of great content to help them decipher through all that information.
Yeah. Well, now that real estate prices are going through the roof, it's becoming a real big issue. That's for sure.
Yeah, and I think one of the things is that if I don't have a cottage for full disclosure, but I think if I spent my life buying a cottage, building it up, having those family memories, I would really want to pass it down to my kids and my grandkids. But it becomes kind of tricky. You've got multiple families involved. You've got your son, your daughter, spouses involved, grandkids. It's a difficult one.
Yeah, agreed.
And so the first point here on some of the strategies around passing down the family cottage is to be realistic. So, where to begin, right? So here are the what if questions for you and the generations to come is, what if only one of my kids can afford the cottage? What if one kid can afford it? What if one kid can't? What do we do? What if the kids or the children can't keep with the upkeep? Because again, in most cases, mom and dad may be up there for 3 or 4 months, cutting the grass, taking care of all the stuff. And the kids at some point may just show up on the weekend. What if some of the kids live too far away from the cottage? Do they want the cottage? What happens if a child has a divorce or a bankruptcy or dies? What happens then with regards to the cottage? What if there's a disagreement on how to take care of repairs, housekeeping standards? And what if the kids don't play by the rules? So there's a lot of consideration that has to go into, is this an asset that we would love to pass on, but is it an asset that we can truly pass it on?
Well, unfortunately, people don't take these things into consideration until sometimes it's too late. We see it a lot in our practice that the most important thing to do is communicate with your family. I think that's the key. Start early, communicate. How do you want to see this passed down? Who wants it? I think all those questions need to be answered before you decide who gets the cottage.
And to be truly realistic, right? So,
yeah.
And the best time for those out there to start planning the conversation is now. The next generation, may lack the desire or the capacity to share ownership, to share cost, and to take on the obligation. So it's important that I think if you're up there this summer with your kids, maybe sit down over a cocktail at some point on the patio and talk about the fact that, is this what you guys want? And if it is, then we got to start planning for it.
Exactly. And one of the things that most families don't plan for is the big tax bill, the potential capital gains tax bill. The federal capital gains tax, it's a big hurdle for passing the family cottage on. It can result in a huge, massive tax bill, and sometimes in some situations, it can be a double taxation. It can be a real problem. If the cottage is given to the children during the parent's lifetime or on death, or perhaps even sold to the children at a discounted rate, because most parents don't want to give it to them for the fair market value. They obviously want to give them a bit of a discount. The problem is the government views that's when they sell the cottage, they view it at fair market value. So even if you get that discount, it doesn't matter. The government views it at fair market value.
Yeah, you really need to get some good tax advice on that and make sure that you're on the right side of taxation. And the other thing too is that it's amazing, right? I mean, you look at the price of real estate in the past 10, 20, 30 years, it's skyrocketed. But if you've got that prestigious cottage on the lake in Muskoka, geez, or things have gone up high maybe in Niagara or the Niagara region or the Greater Toronto region, things up there have gone up just as quick.
It's crazy, and that's the problem. And a lot of these cottages have been passed on from generation to generation. So, for example, they bought it, 2 or 3 generations ago for $50,000 or $100,000. Now it's worth $2.5 million. The problem is that the government, the capital gains is going to be based on that selling of the property at 2.5 minus whatever you paid, which could be a very minimal amount, and the government's looking for that difference in the capital gains tax.
And there again too, Jason, one of the big challenges is that do I do the transfer now and start to pay some of the tax each year? I can start to gift a portion of that asset, or do we wait till we die? And then, there's a massive tax bill because all the other assets in the estate, you've got RSPs, you've got RIFs, you've got other maybe rental properties that get put into it too. The third thing here on some of the strategies to pass on the family cottage is you've got to consider probate fees. So if the parents leave the cottage in the will of the last to die, rather than transferring it during their lifetime, some provinces will obviously make you pay probate fees. And in Ontario here, if that $1 million cottage has to go through the will, you're looking at about 1.5% in probate fees. So it's important to start planning around the probate fees. They're not a huge expense, Jason, but they're a nuisance expense, right? So exactly. The question we have with our clients is, if we pass it on now, we could possibly avoid the probate fee at some point in the future.
Well, it's probate fees, and it's also time and effort. I mean, the probate could potentially take years too, right? And I believe probate fees are probably going to go up at some point, right?
Well, for those out there, when a person dies, there's the federal tax bill. All of your assets get basically added into a pot, and the federal government takes a big portion of the taxes. Ontario looks for a way to take some money back themselves, and it's in the form of probate fees. So this is an Ontario tax, more or less.
Yeah, exactly. One of the other things that to consider when you're passing on the family cottage is considering the property transfer tax. So some provinces have this property transfer tax or fees that are payable on the transfer of the cottage. So in Ontario, this tax can be significant. And it applies on any transfer during lifetime of the parents or on death, and whether it's a sale to the kids or just a gift.
Exactly. So again, the common theme here is we're hearing is more tax, more tax, more tax. Number 5 here on some of the strategies when you're passing down the family cottages, you may want to consider a trust. So transferring the cottage into a trust during the parent's lifetime can help save some legal fees relative to probate and legal fees, related to probate and legal fees. Also, putting the cottage in a trust can give the parents some time to make some decisions about succession, how to test if the kids can manage the property. A trust is a bit more flexible, but of course with the trust there's some disadvantages as well. And again, so with the trust, this type of structure, what we have to do is we have to get the lawyers involved and get some legal advice on this to go through all the pros and cons. With the trust, there is a cost to it. Obviously, and again, it's another consideration, but there are some advantages, there are some disadvantages of the trust. But again, we need to get another professional team involved in this decision-making process.
And trust can be a scary thing, right? So like you said, it's important to get the legal advice, the accounting advice, and of course the financial planning advice all on the same page.
Well, I always say there's 3 really important people on the team when it comes to passing on the family cottage. It's the wealth advisor team, it's the legal team, and it's the accounting team.
Yeah, right? Exactly. Another thing to consider is getting a mortgage. So if money's tight for the children, a mortgage might be the answer for them. Children can take out a mortgage to pay the taxes, the property transfer tax, as we just talked about, or the purchase or the sole purchase of the cottage. Mortgage payments can be it's an affordable alternative to investing in city real estate. The children can designate the cottage as their primary residence, and again, that'll help reduce the future taxes.
Well, it does make sense, right? So if you've got that $1 million cottage and you've got a $500,000 tax bill, at some point you want to pass it on prior to your death, then maybe it makes sense to pass it on. The kids can take out a $500,000 mortgage. maybe you've got 3 or 4 kids that you're sharing the cottages or sharing the cottage with, and that $4,000 a month mortgage payment for 25 years might be a really low cost way to have access to the cottage. So if you've got 2 or 3 siblings, hey, they all kick in $1,000 to $2,000 per month, and they've got this beautiful place up at the resort, the beachfront resort. So number 7 here on some of the strategies as well. So Jason, they could take out a mortgage, but one of the most easier ways and a bit more cost effective would be consider life insurance. So parents could take out life insurance on themselves. The kids can pay for it. The parents can pay for it. The estate can pay part of it, obviously. But it would cover capital gains. It would cover property taxes. And again, the kids would step up. And again, if it's a $500,000 policy required to take care of some of the final tax, you've got mom and dad, they're relatively healthy. Maybe they're in their 60s and 70s. They qualify for it. It may be a much more affordable option than the option prior, which is taking out a mortgage on it.
Yeah, the life insurance option is the most cost-effective way to pay for those potential tax implications. The final thing to consider is maybe consider just co-ownership agreement. If several of the children, you've got 3 kids, 2 of them want the cottage, maybe co-ownership agreements can do the trick, and you can highly customize them. It depends on if the kids want it or don't want it, and that's where some good financial planning come in because of the equalization. You want to make sure that if certain kids are getting the cottage, then the other kids might be getting some of the other assets.
Right, exactly. So, there again, in closing, passing on the family cottage can be a costly, legally complex event, emotionally taxing, also taxing as well. But if you do want to keep the cottage, our advice is speak to your wealth team, talk to your financial advisors, talk to your tax advisors, talk to your legal advisors, identify what the plan is. But the first step of the plan of passing on the cottage is to have that conversation with the kids.
Communicate.
Absolutely. So hopefully this adds some insight to those that are heading up to the cottage this summer. If ever down the road you need some help out there, feel free to reach out to our team.